The Edgeless Horseman here. In this video I'll talk a bit about what I deem to be the ultimate risk-reward strategy, which entails basically being an asset collector or hoarder or owner. Basically, I mean, it's no different than being a value investor. It's just that you have to be a bit contrarian and obviously see through the BS of Mr. Market. It's pricing ability when sentiment is bad, and of course, just start off with the fact that yes, sentiment is super bad, especially in the juniors, especially in the gold juniors. And yes, we've seen breakouts in Barrick, GDX, etc. But most juniors have yet to respond. So I mean, it's not a flip of a switch. There simply aren't small retail guys haven't joined the sector yet, basically. But institutions seem to be buying the actual producers, etc., which they can buy. But I guess we need to see some more upward momentum, and especially perhaps some upside in silver, etc., for people to get really greedy, or not even really greedy, to get some greed going, because right now there simply is no money entering the junior space, so they persist in being really undervalued. And again, especially the gold juniors, given that the gold price is at $1,900, and this I've shown this chart many times before, and how do people work at these sentiment lows. The focus is on risks, how much they can lose, because they think, I mean, on paper they've lost so much already, because typically they buy in around here and then they're down, and then they can't stomach losing anything more, and you'll always hear people like, how can you guarantee it's a bottom in place, the chart looks horrible, I'm waiting for a breakout, yada yada yada. Meanwhile, I mean, my strategy is always to simply not care about the noise. I just look at, let's say, the facts. What is the price of a company, and what's the guesstimated value of the assets said company holds, because we will forever swing from undervaluation to overvaluation. It's simply just buying, to get most bang for your buck, and that's why I like the topic of being an asset hoarder, pretty much, and set yourself up to making the most amount of money, let's say, for when we hit a sentiment high again, when it's a risk on environment and investors and speculators are willing to pay for potential. Now most banked success is trading at a discount, and you can see this all the time. I mean, I wrote a piece a while back, that the game is, quote, rigged, which is sorta is right now, or has been for quite a while, because when you've seen juniors put out good news releases, which potentially have a very low chance of happening, they don't really get rewarded. I mean, I've seen juniors put out a discovery hole pretty much, and the market just yawned, while you can almost guarantee that if the results would have been poor, these juniors would have gotten slammed. So basically, that's at face value, that's we're taking on risk with no to little return, or little to no return, because okay, if the results are bad, which might have a higher likelihood of happening, then you lose money on paper. If the results are good, you don't get any reward for it. So you're taking, I mean, it's basically a reward-free risk. And that obviously will change. That's the whole point of this video, that things will change, and later on, when we get up to these levels, we'll get more rewarded than we should. Stuff will fetch a much higher price, than is rational, pretty much. And yeah, that's the moral of the story. So let's look at a few things. This is actually a interesting stock, Strategic Metals. It's a prospect generator, and I mean, I have known about it. It's just that, I haven't been that interested. I mean, like most people say, prospect generators are so boring. I mean, if you look at this chart, it looks like a snooze fest most of the time, or at least it appears that the trend is super bad, but it's actually not that bad. I mean, it doesn't look like much, but it's actually been trending higher. And the interesting thing here is that whereas I think Bear Creek Mining is a good example of, a proxy for sentiment, Strategic Metals might even be a better proxy actually, because the company sent this on Twitter to me. And I mean, just consider this, market cap 38 million, cash 7 million, shareholdings worth 32 million. And I think they said they have 120 projects and something like 11 royalties. So basically what this slide says is that the market is giving away 120 projects, the potential intrinsic value of those 120 projects and 11 royalties for absolutely free. It's like it never existed. It's like the company didn't even have them. So I mean, theoretically, they could wrap up the company, give cash out basically, sell the equities, etc., and you would get away with a neutral return. And then they would throw in exposure to 120 companies and 11 royalties. Obviously, that doesn't make much sense, especially given that, okay, it's not the most impressive, positive trend, but they have obviously been doing something right because they're still around. And even when they get absolutely nothing for their entire portfolio of projects and royalties, it's still higher than most previous bottoms. And during the let's say sentiment highs here, that's when they actually, I mean, I don't think much changed in this time period except sentiment. So you have these swings to let's say 81 cents from 36. I mean, that's a pretty good return, especially if you take on pretty much no risk at all. I mean, at face value again. So if you're buying the company, you get a lot of upside potential, but right now no downside potential. I mean, except that yes, price can go a bit lower, etc. But there is zero risk of you overpaying. Absolutely zero. This might be the most no-brainer buy in the entire junior space. But obviously, at the same time, it's not like I think that the 120 projects are all prime projects or whatever. But I mean, even if you put a $1 amount of the potential in each project, that's at least $120. And yeah, it's just interesting, and I would like to show this slide. Okay, so in a bad sentiment environment, risk off, which we're in now in the junior sector, here you have the intrinsic value of banked success, pretty much. What's already happened? The results up to this very point. A company might, an advanced explorer might have, or a developer might have 2 million ounces, might have a study done with an NPV of 400 million, let's say, but it's selling for way less than the actual value on paper. And obviously that means that you pay nothing for the, let's say, probable future growth, and absolutely nothing at all for any potential beyond that. While in good sentiment, typically what is known is overpriced. I mean, you pay more than what is the banked successes. And you actually, the market puts a price on the, probable future value, as well as, pricing in pure potential. And that's what I mean. Examples of this would be Garibaldi Resources running up to 400-500 million market cap without even a single assay out. GT Gold ran up to almost 100 million after nice soil samples, and I think they had at least drilled a hole or a few holes and actually hit something. But like compare that to now, exact same news could be put out in the market by the exact same company. A theoretical example, obviously, and it might move up to 20-30 million, something like that. Exact same events, just totally different risk on, risk off, sentiment environment. So again, here in good sentiment, it's risk on. People think, the main focus is how much they can win, let's say. So they're willing to take on an increasing amount of risk for lower chances of success. So potential is for sure priced in because, that's when we're greedy. We're thinking about the blue sky potential. Even if we know a company might be pricing in Garibaldi's case, I mean, sure, there's a chance, that the rumors would be true, or the thought of it being the next Voices Bay or whatever. But still, that was a huge chunk of the blue sky potential that the market was pricing in. And now we again, in the current environment, even known success, known value, is trading for pennies on the dollar. So obviously there's a huge opportunity in front running the shift, and that's basically what a sentiment driven market like this is all about. Front running when we go from bad to good sentiment, preferably even great sentiment. When you can basically, you will see newly formed companies basically have a few chip samples only, let's say, in one project, and they get a $20-30 million valuation because they have silver in their name. That will happen for sure, like it always happens at every sentiment peak. And I mean, I don't know exactly what happened with strategic metals, if they made a discovery or whatever, but you can obviously see that this was the major bull peak in 2011. So you can see what happens when a sentiment really spikes. So up here, juniors were getting a lot. I mean, I think ounces in Brazil were trading, way above $100 per ounce. Now they might be trading at 10, something like that, $10 per ounce. So it's the delta change between the sentiment that where the real money is. And obviously, I mean, on the topic of asset hoarding, if you're not paying for any potential, but you know that the market will pay for potential one day, then it's kind of a rational idea to become an asset hoarder, basically. Because, okay, take this example. I mean, there are cheap single asset juniors, no doubt. There are many that, should probably, I can see an easy 300% return when sentiment gets better. But still, okay, if you have a single asset junior, and how the market works, I mean, mostly it can only focus on one project at a time. So there will always be like a flagship project or a flagship, and of course, when sentiment is good, it will be, the risks are going to be to the upside. While now people are focusing on the risk to the downside, etc. So you have this single asset junior. Currently, let's say it has a market cap of 10 million. It's trading at a 50% discount. So let's say it's actually the flagship project is worth 20 million. Okay, that's nice. I mean, that's 100% return when sentiment gets better, let's say. But then you have also a multi-asset junior, and again, the market is only factoring in one project, the flagship project, and it doesn't pay anything like we saw with strategic metals. They get nothing at all. You don't pay a cent for their 120 projects. So you get everything, any upside in there for free. If they would spin out 120 projects, you would catch that risk-free, basically. So okay, let's say the flagship project is also worth 20 million and the market cap is 10. So you're buying the flagship project for half the value. You only pay half the price for what it's worth. But then they also have a pipeline of 4 assets, additional assets. And again, during sentiment lows, like we see in strategic metals, you are not paying a cent for this. So if you're not paying anything for this, that means that this company, this project could be stolen or burnt down or given away, and you would still not be overpaying. Same goes for this and this and this. The thing is, of course, I mean, that's basically risk-free upside. I mean, there are caveats like, you know, upkeeps, etc., and that differs between jurisdiction and yada yada yada. But just theoretically here, if you're not paying for it, that means this is theoretically risk-free upside. So you get 100% discount on all of these because the market can focus on more and isn't willing to pay anything for potential. So okay, what could happen during a sentiment high and the multi-asset junior spun its assets out? Take first the single asset junior. Let's say a sentiment high, so market cap rises to 20 million. You get your 100% return. It's now at fair value. So there's 0 discount left and the opportunity is gone. Okay, then you would sell if you are a value investor and you think it's reached fair value. The multi-asset junior on the other hand, which we say spun out 2 vehicles. One vehicle with 2 assets and one second vehicle with the 2 other assets. Okay, let's say they are decent projects at least. And of course, like going back to my point earlier, I mean, these spin out vehicles in a really good environment, if they have the name silver in it, they could fetch a much higher price than 10 million. But let's just, for argument's sake, to just prove a point and be a bit conservative. So you as a shareholder then, you own the original company that now only owns the flagship project. That flagship project and the original company revalued to 20 million, which is fair value, so you have 0 discount there. But you gain 100% return. But then you also got the spin-off, the assets that were spin-off. So in spin-off 1, that on the open market will trade at 10 million, and the second one at 10 million as well. So okay, you paid 10 million, but in a good sentiment environment, you get a 4x return when you combine the value of the 2 spin-outs with your original holding. While in the single asset unit, it had no risk-free underlying additional value to spin out. And again, the price was the same for buying both. So these were all, again, for free. So this is, insane risk reward pretty much, simply because, or mostly because, it's almost risk free because you're not paying anything for it. So even if this project was shit, or they gave it away, or it got nationalized or whatever, you're not still overpaying. Even if 3 projects somehow disappeared or sunk into the bottom of the sea, you would at least have 1 additional asset to spin out and get some value. And I mean, I recently talked about this on K Report. Preferably, you would obviously want to have as advanced and valuable assets as possible that the market is not, forcing you to pay anything for. But there are not that many juniors with 1 flagship deposit and then 3-4 additional deposits. But there are quite a few very cheap early stage exploration juniors with pretty decent to good looking exploration assets, which is pure potential or almost pure potential right now. But as we've seen, potential will get some value someday, especially when you spin them out. So I mean, it's just a way better risk reward to buy this multi-asset junior compared to this, especially if their flagship projects were in equal value, let's say. And consider this fact that let's say both companies didn't create any more value before we hit a sentiment high. This potential is still worth something. So even if both companies sat on their hands, just from a change in sentiment, this multi-asset junior could create value or monetize the irrational pricing of Mr. Market during a sentiment low, just by spinning out assets and forcing Mr. Market to put some reflection of value on these spinned out vehicles, because obviously they're not gonna spin themselves out, or let's say the companies aren't gonna trade for 0 million. I mean, you can see absolute dog shit companies right now that at least are trading for like 4 million. So even if they were pretty bad, but they just spun out and get a 4 million valuation, that's still 40% of the price you paid for the whole company. So I mean, if you get 4 million on both of these, that's 80% return. Even let's say in a poor market environment. So I absolutely love spinouts. That's why I'm trying to steal as much value as possible. That I'm not, again, stealing implies not paying for it. And there are absolutely a trough-full of mispriced multi-asset juniors out there. And I mean, I just put up a few examples about how much real estate you can actually steal right now. And I just came up with 4 examples here. Nevada King, which has an enormous land position in the Cortez Trend, of all places, in Nevada. Obviously, absolutely prime ground, very limited real estate. There's only one, Cortez Trend. So as I see it with Nevada King, I'm pretty much not even paying probably full price for the Atlanta gold mine, which they've been drilling recently and put out some great success. I mean, even if that turns out to be 1 to 1.5 million ounces of a high grade core to it in Nevada, and I'm just gonna see here what the actual market cap is. Okay, $97 million Canadian. I think they have like 17 million in cash or working capital. So that's like 80 million Canadian for Atlanta gold mine, given the jurisdiction, etc., grades they're seeing right now. Yeah, I think that's a relatively, I wouldn't say I'll be overpaying. And then I get 11 projects for free, and they're the 3rd largest claim owner in the Cortez Trend, or I think in the Cortez Trend, or whole Nevada. I'm not sure. I don't remember actually. But this is all for free basically. So they could give away up to almost 11 projects, and I would say that you're not even overpaying for it. So any upside here, any spin out value, any future JV, and anything like that, any upside here is what you get for almost like risk free. Almost risk free. Again, upkeep costs and yada yada yada. But they could spin their entire land package out in up to, let's say, spin out 11 companies. And if you have one project is prime ground in a good environment, each of these projects might get a 20 million market cap. So that's what I'm front running, and management's obviously aware of that. Pacific Ridge, they have the Cleule gold and copper play. Funny thing about, it's absolutely been crashing lately after the last and third and last hole from Cleule wasn't as good as the previous 2. And it's just mind-boggling. I mean, these guys, the first 2 holes were great, obviously early stage, but the whole company right now has a market cap of 15.5 million. And I think it's actually down like what, let's say 40% in a week after that hole. Obviously this is probably brokers, etc., front running a financing, so it's artificially cheap. But I mean, that's the whole point of this video basically. I mean, you can buy they have, I think, a total of 8 projects including Cleule. You can buy 8 projects for 15.5 million right now. And one of the projects recently saw a joint venture entered with Antofagasta, which is a major copper company. So it's like of course it's beyond brain dead cheap. If they would spin this out in like different vehicles, etc. Okay, do you expect each vehicle to trade for $5 million, including Cleul? Of course not. So it's like, yeah, no brainer. I mean, it's absolutely ridiculous, and there's pretty much impossible to be overpaying right now, and there's certainly a lot of upside potential. Montero, Golden Hill. You pay for Golden Hill. I wouldn't say you even pay for that, because Montero has a market cap of 9.6. Let's say they have 4.6 million in cash, so that's 5 million Canadian in enterprise value, and you get 6 projects for that. So I think Golden Hill is worth way more than that alone, and then you get 5 additional projects. So imagine hot junior sector. Silver is rocking. These 5 projects are silver primarily silver, by the way. Let's say Montero, the original Montero vehicle, keeps Golden Hill, spins out the 5 other assets in 2 different companies, and name them Peru Silver, yada yada, and Peru South Silver, whatever. Do I think the combined market cap of those 3 vehicles will be higher than $9.6 million, and that's excluding the cash? Of course, that could be a multi-bagger from the spin out alone without even lifting a finger, except doing the paperwork to spin them out. Headwater Gold. Market cap of 10.9 million. I think they have around 1.5 million in cash or something like that. So let's say 10 million Canadian. They have 10 projects. They might even have more, but 10 that I know of. And let's say you're paying for the potential spring peak right now. They have projects in Oregon, Idaho, and Nevada, like pretty prime ground. If they divided all the assets into Oregon focus, one Idaho focus, and one Nevada focus, do you think the market cap is going to be 3.3 million given the quality of these early stage projects? And even in this environment, no way, absolutely no way. And especially in a hot sector, I think they could probably, again, given the quality of the projects, probably 30, 40 million actually per vehicle in a hot market. And it's trading for 10 right now. So I expect to make, I would be shocked if I didn't make quite a bit of money on Headwater Gold going forward. That goes for all of these. Here's Rick Rule talking a bit about what I'm talking about here. Okay, it's going over more stuff about management sitting on their hands. But the point is that Ross Beatty, being an asset hoarder is what he's talking about basically. And that's what Ross Beatty did with Lumina Copper back in the day. He picked up a bunch of projects that were uneconomic at the time. So he wasn't even, at face value, he wasn't even really stealing value. He was front running higher price environment. While right now in the gold sector, the gold price is good. So it's not, he took a risk in the sense that right now the projects were worthless. But there's not too many gold projects that are suffering from a low gold price right now, if you know what I mean. Well, we have had cost creep, but the main point is that he was front running a higher price environment for copper as well, but we already have a high price environment for gold. It's just that the juniors are still dirt cheap. So I'm just going to go through a few here. This is Nevada King's portfolio. Again, I think this is basically what you're paying for. You get everything of this for free, which obviously could be spun out, in 11 different vehicles in a better environment. I don't see how you can possibly be overpaying for this right now. And this is basically, as I see it, that's like almost risk-free upside here. Almost. I mean, again, it's like they will likely spend some money, etc. But I think if they gave away all this, I think you could make money on this project alone. So this is a absolute no-brainer in my mind. That's so much potential upside that I'm not even paying for. So therefore, I'm not really taking much in terms of risk. Firefox has a huge land position. Their market cap is 26 million right now. I don't know exactly what they have in cash, but let's say 3 million, so 23 million. I mean, there's been JVs dropping from, or news releases about JVs from Orion with, I think, B2 Gold and Kinross, yada yada yada. I mean, here you have Agnico Eagle. So you have like 3 mid-tiers to majors in this area. Firefox owns a huge chunk of prime ground. They're not latecomers. I mean, this is actually, prime ground because they were early in. And they have kept 100% ownership in all of these projects up until now. I mean, that might change, of course, but they have a largest 100% owned land package, I think, especially of any junior right now. And I would suggest that they could JV a few or several perhaps projects to mid-tiers or majors in a heartbeat, basically. Or they could, again, simply spin out everything. That this is like Lapland North Gold. This is Lapland East Gold. This is Lapland South Gold. And you have the Mustajärvi discovery. So let's say the original vehicle actually keeps this package of rocks. I mean, this is the Ikkari, which is or area 1 where the Ikkari deposit is. So this is this Sorvi project, etc. is a hot area. Definitely, I mean, especially, they could spin it out now and get a higher combined market cap, and therefore, benefit shareholders in a hot environment. Each of these might be fetch a value of like 30 million or more. So that's like, let's say up to 100 million in market cap. They're trading at 26 for the whole shebang right now. So this is another one that I intend to hold for a long time and make good money on. And Montaro, I've talked about Montaro before. Again, I don't think you're even paying for this, and you get all of this for free. So in case they spin out some assets, let's say, I expect to have a multi-bagger in Montaro without taking much in terms of risk. Eloro, that's not, it's not a micro cap for sure, but I think it's undervalued based on Iska alone. And then they have like 9 additional projects in Bolivia. And I think they're handpicked by, Osvaldo Arce et al., who basically, picked Iska as well. And that looks to be turning out to a, world-class deposit. So what do you think the potential is in these other 9 projects? Given the success at the first one, I would suggest that these are above average in intrinsic value from a potential standpoint. Obviously, they're in Bolivia as well, so they would have a jurisdictional discount. But imagine if they spun out all of this, or sold this Iska, and they spun out all of this. What would this be worth to shareholders buying in now? I think a substantial amount, maybe in a good environment, if they spun all these out into different vehicles, 50, 100 million, pretty easy, I think, especially if Iska kickstarts some excitement in the area. Absolute no-brainer in my book. They also have the what is it called, Virginia project, I think, in Peru. So again, it's like, in my opinion, I'm getting all of this for free. and I'm not even paying full price for Iskiska. So that's like, yeah, up to nine juniors worth of additional projects in addition to Iskiska. So I'm buying like 10 juniors, paying for one. White Rock, which I did a piece on recently. This is again just mind blowing. I think they have an enterprise value of around like 17 million US. You get all of this for that price. And this alone was worth, when this was in a separate vehicle. This is actually a really good point what I'm talking about. The Woods Point Gold project, when that was the flagship project of our AU Star Gold, which White Rock merged with, this alone fetched around this price in the market. So when this was in a, let's say a single vehicle, this was worth this much according to Mr. Market. But then when you consolidate it and put it into a big portfolio of projects, all of a sudden the reflected value goes down. Or we are to believe that, all of this is worth nothing. Because they can't both be right and wrong at the same time. If Mr. Market was rational or even close to right then, which I think it was underselling Woods Point actually, but anyway, let's just pretend it was right about Woods Point when it was in a single entity. It cost about this much to buy. That was the, Mr. Market's value put on it. And obviously this wasn't trading at a market cap or an enterprise value of 0 when White Rock, when this was the White Rock portfolio. But if you combine it, all of a sudden the price disappears. It went to scare junior investor heaven basically. So obviously you're just, for the same price almost as like in 2020, you're stealing even more stuff. If they spun out Red Mountain Last Chance into one separate, you already have a high grade resource and a personal gold target and a bunch of VMS targets, and they listed it in Canada, and silver got hot again. I think they have like 50 million ounces of silver. I could easily see this get in a hot market environment up to, it sounds crazy now, but like $100 million in a hot market. I think that would be a piece of cake, and this as well. So I don't think people really understand how much money can be made when we go into a sentiment high again. And this was a news release recently out of White Rock. They increased the size of the zinc silver resource at Red Mountain. What was the market reaction? And remember, you weren't even paying for this. If the Woods Point valuation was correct in our AU Star Gold, the stock went down. So when something gets bigger that you're not paying for, and the company as a whole gets cheaper, yeah, that's when you know that you're investing against, well, the marginal buyer seller is absolutely brain dead right now. This alone again, probably worth more than the whole company. This is probably worth more than the whole company. And here we have Headwater Gold, which again I think you could spin out in a hot market environment and have a 4, 5, 6 bagger. These are all legit targets. They basically shown proof of concept already at like 2. Midas North project. Look at the scale bar here. It looks small, but it's really close to Hecla, and they're looking for the same type of targets, and they have a pretty big footprint here of potential. So what do you think? This in 2016, this would probably at least get 10 million, at least 10 million alone, which is more again than the entire market cap of the whole portfolio of 10 projects right now. Absolutely no-brainer. Novo, probably, I mean, in terms of stealing real estate, No is like the king. I mean, they have more land and more targets and more projects than any junior I know of. Of course, I mean, the thumb in the eye lately has been, of course, the underperformance of Beaton's Creek. But I mean, look at all this potential you're not even paying for. I mean, this is what I don't not remember exactly, but like let's say 12,000 square kilometers, and then you have Malmesbury, which they're drilling now, and it sounds like it's going pretty well. And then you have the ace up the sleeve, the ore sorting potential. If they unlock all this real estate here with ore sorting, and again, you're not paying for anything except like the Beatons Creek mill right now, maybe some targets in Mosquito Creek, and their very large equity portfolio. So this is basically all of this is almost risk-free upside, as I see it. But again, they have upkeep costs, and obviously you would have to spend some money to prove up something. But if they, again, the potential here, it's abnormally large, and if ore sorting works, that would be a game changer, I think. From a long-term perspective, I don't think there's a junior that even comes close to the potential here. Best part is that I'm again not paying for it. So even if the chance of success of if it was a chance of success of 1%, that would still be cheap. And again, I mean, bashers would obviously not agree, but at the same time, I mean, like all the other examples I just showed, I mean, the market is absolutely brain dead. So why would you be listening to bashers in this environment? That's just from a macro perspective. I mean, if the risks of falling like the average pumper right now is considerably less than at a sentiment high, and we're at a deep depressed sentiment low where assets are given away for free by Mr. Market. So if there was any time you should dare to consider the upside potential, that's pretty much now. And of course there are no guarantees, never are. It's just that what are you paying for it, and what's the, let's say, chance of success and value in case of success, etc. So I'm just saying that I don't think I'm paying anything for all of this, including the ore sorting, basically. I mean, the mill alone, I think if replacements cost 200 million or something after the cost creep. And yes, the Beatons Creek deposit itself has been underperforming, but a few 100,000 ounces in the Mosquito Creek basin put in the mill, that could churn out pretty good cash, especially if Australian gold price keeps going up and the cost inflation wanes off a bit. We already covered that. Magna Mining, great example. They recently put out a news release that said they have a non-binding MOU with none other than Mitsui, which is like a $50 billion Japanese conglomerate. I pretty much think that sums it up. That's for the Shakespeare deposit alone. And that MOU suggested that the Shakespeare deposit is at least worth 100 to 200% higher than the entire market cap of the company. So in terms of risk reward, you have a $50 billion company saying that the value of the Shakespeare deposit, the banked success, pretty much, is worth at least 100 to 200% higher than the entire market cap of all of this. So that's like, at face value, that's like, okay, thank you, Mitsui. You're suggesting I should have a pretty probable 100 to 200% upside, and I get everything else for free. How do you beat such risk reward? I mean, if you're underpaying by 100 to 200%, you're not taking any risk of them not finding anything else, at face value. Yeah, I've shown this. Again, Pacific Ridge, the Antofagasta JV. I mean, again, it's like, okay, a major is going to spend 10 million for 75%, and the whole freaking market cap of the entire company is 15. And this is like one of their 8 assets. This isn't exact a multi-asset junior, but Cabral has such a huge land position that theoretically they could, look at the scale bar. They could chop all of this up into a couple of juniors. And here you have the Tocasinho mine that's being in development, with, I think it's backed by Lundins and etc. Incredibly cheap. You're not paying for any potential. Just from the discoveries they've done over the last 10 months or so, it's like, yeah, it's undervalued already based on what they know they have. What they probably have, I should say. And you're not paying for any additional potential. Okay, here we have SK Mining. This is not a cheap one, but at face value, but given how extremely large their land position is, this is Skina, and they have one deposit. They're worth 1 billion or so. You obviously have a good, good sized deposit with good grades already. But how many, all these Bleg samples, they could theoretically spin out this as like SK Northeast, SK Central, SK South. Maybe TV and Jeff becomes a company maker alone, let's say. So in reality, I don't think, on a long-term basis, I don't think SK Mining is even expensive, but it's relative. It doesn't have that no-brainer 100-200% upside like some juniors have. So from a relative risk-reward perspective, yeah, this is my largest position, but is it a most blatant buy? I don't think so. Especially if you consider the margin of safety aspect, because SK Mining doesn't really have something banked that makes up 500 million. But I personally think that TV and Jeff will be worth that amount, and potentially more so. In theory, I think you get Scarlet Ridge, Spearhead, Vermilion, C10, Cumberland, and all the other. They have a bunch of here's Scarlet Ridge. Oh yeah, okay. You get all of these things for free. So yeah, it's hard. It's I think it's both not cheap and at the same time kind of cheap. And I just want to finish with this one. I think it sums it up pretty much. I think it jives with the fact that, okay, why am I sitting here and constantly, talking about these no-brainers that I can't understand how anyone would sell juniors right now. This jives with this being potentially the best investing environment for a junior speculator that's been seen in the last 100 years. Gold is at 1900 for Christ's sake, and the juniors are trading like it's at 1400. So I can't believe that relative to the gold price, especially gold, again, juniors are possibly the cheapest they've been, in the last 100 years or so. Because like I showed you, it doesn't take much imagination to see how many of these juniors could easily create several 100% of returns without doing much, except forcing the market to be a bit more rational and reflect a bit more fair value than it is now. And of course, one good tool for that is or spin-outs, spinning out assets and forcing the market to actually value each asset on a standalone basis, let's say. And that's the reason why the Lundins do it all the time, and why they have created a lot of value for shareholders. Because they know it works. Every time they spun something out, they've shown that it works. So I'm trying to, again, just to wrap this whole thing up, I'm trying to steal as many projects and as much real estate as I possibly can that can one day be sold in a much better market environment where I could get almost risk-free upside, and not small upside. I mean, some juniors, their portfolios, I could expect to see like 200-300% of risk-free upside, something like that. And all I have to do is wait and wait until the sentiment reaches a high, and then hope that management actually spin them out or monetize them in some way. Regardless, I mean, at least the value of the flagship project will, on average, get me a good return anyway. So again, it's like just a risk-free bonus in many of these juniors at face value. Yeah, this was a long rant, but I hope, again, it's like, I know I sound like a broken record, but since I started in 2015, I have never seen a better environment than this. Because, like I've said before, in 2015, gold was at 1100. So every project was worthless. So that was more like, Ross Beatty, buying when the projects didn't make sense, so you got them for free. Now many projects make sense. At least they have the potential to make sense, and you still get them for free. So from a risk-reward basis, you're not even paying a speculative premium that commodity prices will go up. They're just given away for free, despite the fact that gold is at 1900. Yeah, remember, I'm biased. I think I own all of the companies I mentioned, and many of them are banner sponsors. This is not investing advice. Do your own due diligence. Think for yourself. I'm just saying how I look at things, and what makes perfect sense to me might not make perfect sense to you, and then you should stick to your own, investing strategy, etc. Thanks for listening.